In 2019, we gave you Go IPO, the region's first digital IPO application platform, revolutionizing the local equities market. With over $7 billion in capital raised via this platform, the innovation continues. Now we introduce the Go IPO Bond Portal, giving you a fully digital bond offer experience from application to confirmation. So there is no need to go in branch and no extra fees, because seamless access to wealth starts with NCB Capital Markets Limited. Visit goipo.jncb.com. Click offers, then bonds.
Selling online is easy. Whether you're self-employed without a business account or a large corporation ready to join the global online marketplace, we have a solution for you. Accept payments via WhatsApp as well as other social media with NCB Payment Button. No website, no problem. Get started in minutes with ready-to-use customizable templates supported by NCB website templates, or sell to customers across the globe in an online mall with NCB Marketplace. Plus, get a pre-approved business credit card. At NCB, we have the right solution for your business to get you online and earning 24/7. Sign up today at jncb.com/e-commerce. Conditions apply.
Good morning, ladies and gentlemen, and thank you for joining our second quarter investors brief. I'm Dennis Cohen, Group CFO and Deputy CEO, and joining me today on the panel, as usual, is our President and Group CEO, Mr. Patrick Hylton, and our Group General Counsel and Corporate Secretary, Dave Garcia. Also participating on the call, but doing so online, are executives of NCB, Guardian, Clarion, and TFOB. We will have our usual meeting protocols where I will start by sharing highlights of our financial results, after which our President will discuss his remarks. After our remarks, we will have a question and answer session which will be moderated by Dave Garcia. Yesterday, we reported consolidated net profits of $6.3 billion for the half year. Despite the fall in net profit, we remain optimistic as our core business are strong. The territories in which we operate are seeing their economies boosted by tourism and buoyant commodity prices, and we are confident we are pursuing an appropriate strategy to deliver value for our shareholders. Our digital agenda is one of our primary areas of focus. We believe we can provide new ways to enhance operating efficiency, service delivery, and customer service. We remain committed to making the necessary investments in strengthening our digital capabilities, and this will continue to drive the future of our business. While we continue to enjoy strong capital and liquidity across our entities, we remain cautious in our capital management strategies to facilitate and ensure growth and to prepare our businesses for impending regulatory and reporting changes. To this end, the Board of Directors thought it prudent to not declare an interim dividend at this time. A significant development of note is that effective January 1, 2023, the Guardian Group adopted IFRS 17. However, the NCB Financial Group's consolidated results for the 6 months ended March are prepared using IFRS 4. So while Guardian has reported using IFRS 17 in their numbers ending March, the numbers included in these financials are prepared using IFRS 4. NCB will implement IFRS 17 on October 1, 2023. This is expected to materially change the financial statements in terms of presentation, recognition, and measurement of insurance contracts, most significantly the life business. Using IFRS 17, Guardian reported $61 million for the March quarter compared to TT 138 million, which they reported under IFRS 4, a 77 million TT reduction, primarily due to the life segment. I will now share highlights of our recently released financial results. The group reported net profit of $4.2 billion attributable to shareholders for the 6 months ended March 2023, representing a 59% decline relative to the prior year. Our operating revenues of $61.2 billion fell by 12% or $8.1 billion. Reduced net results from insurance activities was the main driver for the fall in revenues, and I will go in greater detail in my segment review. The net result from banking and investment activities was relatively flat, growing by $97.5 million, as increased net interest income and net fee and commission
Recording in
income were
progress.
largely offset by higher credit impairment losses and lower gains on foreign currency and investment activities, stemming from lower asset prices and reduced trading of both fixed income and equities. Operating expenses of $51.4 billion fell by $342 million or 1%. While staff costs grew by $2.7 billion or 11% due to negotiated increases, a reduction in depreciation and amortization expenses, together with reduced professional fees, served to fully offset this growth, contributing to the overall reduction in operating costs. While we achieved a small reduction in operating expenses, the fall-off in operating income resulted in a deterioration in our cost-to-income ratio to 79.7%, up from 72.2% in the prior year. Lower profitability, in turn, contributed to a deterioration in some of our key metrics, namely return on asset and return on equity, which fell to 0.6% and 5.2% from 1.5% and 13.1% respectively in the prior year. I will now briefly discuss the performance of our business segments. Our Life, Health and Pension segment generated an operating profit of $6 billion, a reduction of $9 billion in net insurance activities. This was mainly as a result of first quarter one-off actuarial adjustment combined with increased health claim expenses, mainly due to the resumption of elective procedures that were largely postponed during the pandemic. Treasury, our highest banking contributor, reported operating profit of $4.4 billion, declining by 5% compared to the prior year. The deterioration was mainly due to growth in the segment's operating expenses as a result of the recently upgraded treasury management system. General Insurance recorded operating profit of $4.2 billion, 2.7% or 174% growth compared to the prior year. This segment experienced increased operating income driven by a $1.8 billion increase in net fee and commission income. The net results were further improved as total operating expenses fell by $878 million from the prior year. The segment also experienced reduced claims compared to the prior year, which had a material claims event. Wealth recorded an operating profit of $3.5 billion, a 32% or $1.6 billion decline compared to the prior year. This segment reflected a reduction in net interest income as higher interest rates negatively impacted funding costs. Additionally, the tightening by the central bank has curtailed trading opportunities for both fixed income and equity securities as these assets saw lower valuations. Liquidity challenges in the market slowed investment opportunities, and increased market risks have diminished the appetite for capital raises, both of which impacted fee income. Our corporate and commercial banking reported net results of $3.2 billion, a $106 million or 3% over the prior year. Growth in this segment was mainly due to increased net interest income, reflecting higher net interest margins on loans consistent with existing market conditions. Our payment segment net results reflected a year-over-year reduction of $1.3 billion. This segment includes our card acquiring, card issuing business, as well as our mobile wallet, Link. Link has been making significant investments in enhancing the capabilities of the wallet, and during the quarter, launched the remittance feature. Since the launch in March, remittances have transacted up to 115 million through the platform. As a result of the significant investments being made in payment solution, we anticipate higher costs for this segment will persist in the next year as we continue to roll out new digital features and services. Our card service business witnessed higher net interest income due to a 20% increase in revolving balances on the back of larger purchase volumes. Additionally, sales volumes increased across major sectors, the most significant being government and travel and entertainment. We have also observed increases in other fee income from increased card usage. Our consumer and SME banking segment recorded an operating loss of 540 million compared to a 636 million profit booked in the prior year. The year-over-year decline was mainly due to one-off gains recorded in the prior year from the Jamaica branch optimization strategy. This segment continues to implement strategies to improve yields and sales productivity by leveraging digital investments, further harnessing data analytics, and advancing risk management capabilities. The business has been transforming the operating model and anticipates improved performance. Briefly summarizing our balance sheet lines, our total assets stand at 2.1 trillion, an increase of 76 billion or 4% over the prior year, primarily driven by increases in loans and investment securities, each growing by 7%. Our equity has increased to 176 billion, up by 13%, or 19.7 billion from the prior year. This was primarily due to increased earnings. Net loans had a modest growth of 7% based on growth in both our retail and corporate portfolios. Customer deposits grew to 714 billion, increasing by 1% over the prior year, while obligations under securitization arrangements was 97 billion, a 36.6 billion or 61% increase over the prior year, reflecting a successful $300 million US raise at the end of the prior year. Also of note, policyholders' liabilities declined to 444 billion from 461, a 4% reduction. Also of note, all our regulated entities exceeded the applicable capital and liquidity requirements. Ladies and gentlemen, the environment continues to act as a real-life stress test, demonstrating the resilience of NCB Financial Group, one of the region's largest financial institutions. Our deeply rooted risk management culture, strong liquidity, and robust capital position enabled us to continue to support our customers and deliver solid performance. We are operating from a position of strength and remain focused on executing our strategy to further grow our business lines. We continue to monitor and navigate risks related to our businesses, specifically potentially high inflation for longer and thus higher interest rates, jitters in the global financial market, the unprecedented tightening by central banks, global political tensions, including the US-China relations, and the unpredictable war in the Ukraine. While we hope these clouds will soon dissipate, we are prepared for a broad range of outcomes, and we are confident that we can serve our customers in all environments. Before I close, I'd like to thank and recognize the outstanding contributions of our teams, their unwavering dedication and perseverance, which has been commendable. I'd also like to extend my thanks to our customers for their loyalty and support. We are committed to providing the highest quality service and look forward to continuing to serving you in the years ahead. And with that, I'll now hand over to Patrick, who will share his remarks. Thank you.
All right. Thank you, Dennis. Let me start by acknowledging our directors and company secretary as well, our shareholders of the NCB Financial Group, our customers, dedicated executives of the group, management, staff of NCB Financial Group, and its subsidiaries, members of the media, let me say a good morning and a very warm welcome to you all. I want to start today, as usual, with a quote which for me succinctly captures how we are managing in these, what I would describe as unprecedented times. And the quote is a very short one, it's a very simple one, and it says that, I quote, "In the middle of difficulty lies opportunity," end quote. It was by the great Albert Einstein. In the ever-shifting financial and economic landscape, ladies and gentlemen, resilience stands as a cornerstone of success for any institution. At NCB Financial Group, we have consistently showcased a steadfast commitment to adaptability,
recording in progress,
to perseverance, and this regardless of the circumstances. As a result, not only have we risen above numerous challenges throughout our history, but on each occasion, very interestingly, we have also emerged stronger, better prepared, and more agile. As an organization, we are actively solving problems and engaging challenges with new ways of thinking. This approach, ladies and gentlemen, may from time to time result in discomfort. It may result in disagreement as well. This should not be a surprise for anyone because the truth is we're living in uncomfortable times. However, I assure each employee, I assure each customer, each shareholder that every decision we make is anchored in our purpose and anchored in our core values. Every decision we make is anchored in ensuring that we become a better version of our current selves. Because of prudent risk management, coupled with a robust framework for executing on opportunities, NCB Jamaica Limited has successfully weathered every global financial storm since the 2008-2009 global banking crisis. We have also endured, as you know, the Jamaica Debt Exchange, the National Debt Exchange, the global pandemic, and the periods of high inflation throughout those times. We take our obligation to remain not only viable, but also successful for the benefit of our depositors, our investors, and our shareholders very, very seriously. Our focus on maintaining and exceeding capital requirements and sound balance sheet management ensures that we remain viable, but not only viable, that we thrive in any crisis. We are staunch believers in transparent communication with our customers, providing insights into the positive, we provide insights into the negative, and we provide you with feedback on the complex realities that we face, empowering you all to make well-informed decisions. Incidentally, as I make that point, I would also state, just for the record, that I consider our responses to the recent brazen ABM crimes in the same vein. The safety of our employees, our customers, and service providers is a priority. No citizen's life should be put at risk in the course of their job or while conducting their financial transactions. From time to time, ladies and gentlemen, our actions in ensuring prudent risk and financial management, as well as safeguarding of our stakeholders, has resulted in uncomfortable and at times unpopular decisions, but they align with our value of trustworthiness. People can rely on us to show up at all times with integrity and to do what is right and what is in their best interest. The world, ladies and gentlemen, is transforming at a breakneck pace, and we must not only adapt to these changes, we must also lead the change. That's who we are. We are a leading financial institution. We have to lead change. We have to be the change that we want to see. You will have seen that recently on April 17th, Apple introduced the Apple Card Savings Account in partnership with Goldman Sachs. Nearly $1 billion in deposits were brought in within the first 4 days of launch. These deposits did not flow in through branches or ABMs. These deposits did not flow in through the traditional sources of deposits for financial institutions. And this is following on Apple's 2019 launch of their Apple Credit Card in partnership with Goldman Sachs and MasterCard. What it demonstrates, ladies and gentlemen, is that innovation and partnership are key themes in the financial sector. There was no paper-based application, no lines. It was all done through the iPhone and leveraged data Apple already had on its users. With all this disruption happening around the world, the NCB Financial Group cannot and will not be standing still, and business as usual is quite frankly not an option. Our ongoing investments in new technology and dedication to developing new products and services have solidified our position as industry pioneers. I don't think anybody would argue that point. Our passion for innovation has inspired us to take courageous leaps to confront daunting challenges. We are focused on enhancing our digital capabilities. We are focused on building strategic alliances. We are focused on creating new opportunities for our customers as we ensure that we stay at the cutting edge of the financial services industry. The government of Jamaica has recently embarked on registration for the National Identification System called NIDS. National Commercial Bank Jamaica Limited has received approval from the Bank of Jamaica to develop and test 3 proofs of concept leveraging NIDS. We fully endorse this initiative. It has enhanced financial inclusion, enhanced transparency, efficiency, and productivity in countries such as Estonia and India. And our expectation is that Jamaica should have the same or even better results. As long as there is paper, ladies and gentlemen, there will be long lines, there will be excessive cost and inefficiency, there will be reduced productivity. As long as there is inefficiency and low productivity, significant growth will elude us. We have the opportunity. It is within our hands to change that fate. NCB Financial Group will continue its push to deliver digital-first solutions. TFOB Limited and the Yellow Media Group recently initiated a partnership to support MSMEs with a holistic e-commerce solution using our mobile wallet Link. Yellow will help businesses to develop their websites, while Link will enable business owners to integrate a digital payment platform into their businesses, utilizing a scan or pay QR code at physical locations and a Pay with Link button to enable e-commerce transactions on their websites. TFOB received its license to operate remittance services in March 2023. TFOB recently partnered with MoneyGram to facilitate remittances in minutes via Link. This partnership has been going well for us and for our customers. Mr. Cohen referenced it in his remarks. TFOB has also entered into an agreement with Grace Kennedy Remittance Services to offer Western Union transfer services through its Link mobile wallet. This strategic move supports the Link mandate of improving customer service through its use of technology and expands our footprint in providing remittance services to our customers. This agreement at this time currently remains subject to regulatory approval. We are hopeful that we will be able to launch this added service later this year. These partnerships with Yellow, with MoneyGram, and Grace Kennedy Remittance Services are a continuation of our focus on access to financial services for the underbanked and the underserved individuals and businesses. National Commercial Bank has also rolled out its NCB Pay in partnership with Visa and soon with MasterCard. Let me turn a little to the insurance side. On the insurance side, Guardian is modernizing its core systems by implementing the group pensions portfolio on the Oracle Policy Administration platform, which will help to better manage pension schemes and improve customer service delivery. In Trinidad and Tobago, Guardian is working on its customer experience transformation. optimizing what is described as the issue resolution journey. It has also launched new customer satisfaction surveys and an online customer issue submission portal to improve the resolution process. Guardian's Econoline Limited Pay, a new whole life insurance product, has been launched in Barbados, filling a gap in the company's product range. Ladies and gentlemen, many of us initially have some discomfort with digital solutions. But going forward, boldly in the face of discomfort in pursuit of something greater has been our legacy. And it aligns with one of our core values, which is innovation. So sometimes we have the discomfort too, but we recognize that, that's the nature of business and it's something we just have to confront. And so we continue to think creatively and to pursue solutions that add value. There is significant upside, not only for us as a business, but for any nation, for any other business, financial sector or otherwise, that improves transparency, improves efficiency, improves productivity, and so we as an organization cannot and will not resile from this area of focus. We understand also that the financial sector demands a delicate balance between embracing change and preserving stability. By combining our innovative spirit with a prudent approach to risk management, we have struck that balance. The result is a resilient institution that is well prepared for the challenges and for the opportunities of the future. Our commitment to sustainable growth is demonstrated by our adherence to and our exceeding our capital requirements. We diligently work to consistently maintain a sound balance sheet, ensuring our continued viability during any crisis, but also, very importantly, providing us with the flexibility to exercise creativity and to seize any emerging opportunities. Despite the economic headwinds, we continue to experience growth in key areas of the business. We continue to expand inclusion in the financial system, as I mentioned previously, with products such as QuickSave and with Link. Most importantly, ladies and gentlemen, our mindset towards identifying these opportunities in challenging circumstances and our experience in navigating tough challenges make us well primed to continue navigating this period as we have done other difficult periods successfully. So as we look to the future, our financial institution is poised for continued growth and success. We remain unrelentingly committed to our 2024 aspiration of becoming a world-class financial institution. We are committed to further enhancing our digital offerings, expanding our presence in key growth markets, and maintaining our focus on financial inclusion. In quarters 3 and 4, we will continue to invest in cutting-edge technology. We will continue to forge new alliances with innovative partners. We will continue to develop new novel products and services to meet the needs of our customers. At the same time, we will remain vigilant in our risk management practices, ensuring that our institution remains strong and stable and capable in the face of any changes. The global economic landscape, ladies and gentlemen, remains uncertain, and geopolitical tensions create market volatility. Nevertheless, we remain optimistic about the future, knowing that our strength, our resilience, our experience and determination will ensure that we do well, even as we continue to do good for our people and for our societies. Looking ahead, we see significant opportunities for growth, but this growth, ladies and gentlemen, requires transformation. Our quest for continuous improvement is unceasing. We remain committed to delivering exceptional value to our customers across the Caribbean and our shareholders across the region, across the globe, while staying true, as I mentioned previously, to our core purpose and our core values. I close, ladies and gentlemen, by saying that you can count on us. Thank you.
Thank you, Patrick. And we'll now move over to our question and answer, and I'll allow Dave to monitor the proceedings.
Thank you, Dennis. And maybe I'll just come right back to you with the first question, which we have, which is from Ralston Samuels. But before I do so, just to indicate that we will continue to take questions to our email box, ncbfginvestorqueries@jncb.com. And we are monitoring the chat in the YouTube link as well for any other questions that persons may have live. But we will start with the questions that we received by email already. The first is from Ralston Samuels for you, Dennis. Given the current economic uncertainty, are there any new capital optimization strategies that NCB is exploring? What's different from what we have already been doing? And can you also share any insight on things that the organization can do to optimize the risk-weighted assets relative to where the statement of financial position is today?
Okay, thanks. I think that's a great question. First of all, let me start by saying, certainly as Group CFO, capital management is in fact the cornerstone of my job. We're really in the business of managing capital. Capital is important to run our business and also important for the protection of our customers, policyholders, and depositors. The concept of optimizing capital is in fact an ongoing process which is going and has always been going. With the challenges facing us now, we clearly have had to accelerate and give it certainly greater priority. There are a few activities which I can share now, which you probably will recall last year, we would have actually made in the last quarter, we actually did a reclassification of specific assets, investment securities in the banking group. That was done consequent upon the conclusion of a study which confirmed that the treatment of those assets were not appropriate to the business model and resulted in a saving in terms of capital utilization. That's just an example of our ongoing process. At the same time, we're also looking at even more granular details in terms of the classification of assets. We have situations where there are groups of assets which are treated with a particular classification, but getting into the details, we realize that there are components within that group which may require a lower capital allocation. That's an ongoing process. We are also, given the environment, we're also being a lot more critical in terms of decisions related to fixed assets, and we're also being a lot more critical of our existing risk-weighted assets to ensure their appropriateness and also to ensure they're providing the appropriate return on equity in the environment that exists today. So I said, a great question. It's a key aspect of our day-to-day activities. It has always been there, and we're certainly giving it a lot more priority today than was the case before.
All right. Thanks, Dennis. I have a question also from David Rose for you, although I think you have answered part of it already. So the question is, NCB Financial Group in its first quarter report noted that several securities held under the category under other comprehensive income, OCI, were reclassified as held to maturity as opposed to mark to market. Why was this designation change done now? Was it a part of that reclassification after the 2022 financial year? And is it responsible for the improving OCI changes?
Okay, thanks. The timing of that reclassification was done at the conclusion of a study to determine the appropriateness of the classification of the assets. The conclusion was that the classification was inappropriate for the business model, and we therefore made the appropriate adjustments. So the timing was the conclusion of the study, and yes, it did partially contribute to the change.
Okay. Thanks, Dennis. A couple questions now for Malcolm Sadler, the NCBJ, that's the bank's CFO. First question, Malcolm, is from, well, both questions actually are from David Rose. The first one is this. National Commercial Bank strengthened its Tier 1 capital by moving $8.1 billion to retained earnings reserve in the first quarter. How is this preparing the bank for Basel III, and what is the bank's 2023 capital adequacy ratio?
Okay, thanks, Dave, and thanks, Mr. Rose, for the question. So I'll start off with the last part of the question. The capital adequacy ratio as of March 2023 was 13.29%. The transfer of 8.1 billion is in relation to both our current balance sheet position and an overall strengthening of the bank's permanent capital, and specifically Tier 1. This transfer also resulted in an overall improvement in the regulatory capital ratio, which is the 13.29% that I just mentioned. And also, this transfer will qualify as Tier 1 capital under Basel III. We continue to our periodic parallel runs in relation to reporting to the BOJ under Basel III, and we continue to prepare our systems and our processes for whenever the implementation date is confirmed by the BOJ. We continue to engage the BOJ via position papers in relation to certain material matters, and we're providing feedback on consultation papers that have been issued by the BOJ. Back to you, Dave.
All right, thanks, Malcolm. Unfortunately, we heard some but not all of what was said. We did hear you commenting on what the ratio was at March 2023, as in 13.29%. Dennis, I wonder if I can trouble you to comment on the issue as well, given the connectivity issue.
I think the essence of it lies in the fact that transfers are made based on ongoing changes in the risk assets on the bank's balance sheet. And the transfer was made in order to ensure that there was enough Tier 1 capital to meet the requirements of the regulations. That's an ongoing process because the retained earnings don't count as Tier 1, and transfers are made as required, which is what happened in Q1.
All right. Thanks, Dennis. And thanks, Malcolm. In the context of the connection issue that we just experienced, if you don't mind, I'm going to give you the second question for Malcolm as well, Dennis, which is this. Credit loss impairments went up considerably on a year-over-year basis. With respect to the NCBJ, that's the bank portfolio, consumer and SME banking had provisions of $1.85 billion. Is it that there's a greater perception of default based on our economic models?
Okay, thanks, David. No, there isn't a greater perception of default. What happened is that the prior quarter, or in the prior year, there were reversals of the COVID provisions. That the prior year would have benefited from the reversal of the COVID provisions, and therefore what we're seeing now is in fact more a normalized situation. So it's not a change in outlook, it's just an anomaly because of the reversals of the COVID provisions which took place in the prior year.
Thanks, Dennis. Some questions now for our NCBJ, that's the bank CEO, Mr. Septimus Blake. We have a couple questions from Mr. Ralston Samuels. Contingent on the economic outlook, can you give us any insight about the types of assumptions that you have embedded into the full year output on deposit flows, loan growth, and repricing of the loan book? And how do you expect these to change over the course of the next few quarters?
Thank you, Dave. And thank you, Ralston, for that question. So at a high level, in terms of our views, in interest rates should remain higher or high for longer, or at least last until the rest of the year. We believe that the central bank is pretty much at its peak in terms of the policy rate, and any adjustments going forward would tend to be muted, consistent in terms of what we see as a persistent decline in inflation. From a regulatory perspective, and a lot would have been said about it just now in terms of our preparation for the capital requirements under Basel III in particular as it relates to NCBFG, and then therefore also the types of competitive dynamics in the market. That's a broad level summary of our view. We expect that loans will continue to grow, albeit at a lower growth rate. We also expect deposits to continue to grow, notwithstanding the environment. And we continue to be fairly bullish in terms of our strategy. We expect that we'll continue to grow and diversify our revenue base. We expect our market share across the businesses to remain strong, particularly in the areas of consumer, SME, and our corporates. We expect as well that our payments business will do particularly well and continue to do well. This is an area of important focus for us in relation to capital management and optimizing our capital. The payments business is an important business for us because it generates a significant amount of what I call capital efficient income. And so we'll continue to pursue growth in this area. So notwithstanding the challenges, we continue to be forward looking to spot the risks, but also the opportunities. And then we explore the realities of our business under the varying scenarios which may emerge. So we are fairly confident in our approach, and what you'll see us continue to grow and diversify our business and increase focus on cost and capital efficiency and leveraging technology to do more.
Okay, thank you very much, Bob. So we heard, I think, most of it in the room. From what I understand, online it's being heard fully. So I am going to move on to the next question for you. There's a narrative also from Mr. Samuels. There's a narrative that the financial services industry is going to see a bit of tightening, or banks are going to slow lending. Well, I think you've actually answered this question already. So I'm going to, in your response. So I'm going to move on, Bob, to a question from David Rose. He asks, the question was actually for Danielle Cameron Duncan, but she is not able to be with us today. She is attending to another appointment. So could you speak to the success of NCB Pay so far?
Early days yet. Yes, are you hearing me? Yes, early days yet, but we're encouraged in terms of the number of downloads, in terms of the number of cards which have been registered, and in terms of the number of transactions which are taking place on NCB Pay. We'd have launched with Visa, and we intend to add MasterCard in fairly short order. And the launch of NCB Pay, I'd say, and we have launched the first MVP, and then there are other components of it which we expect to launch in the ensuing months in terms of virtual cards and P2P, which is leveraging MasterCard Send and Visa Direct. So I would say you can call it the end of the beginning and the first MVP on the launch, and we expect that to reach significant success on a go-forward basis. Thanks, Dave. Up to you.
Okay, Bob. I think we probably heard some of it, and unfortunately, as it turns out, we understand that it didn't come through fully on the link, on the YouTube link either. So let me see. I'm going to move on to a question for Vernon James. Vernon,
Thanks, Dave.
amidst
Yeah.
recent events happening with cash transportation, has Link been brought into the national discussion on going digital?
Well, Link has always been a part of the national discussion. As you know, Link currently is the only wallet that offers Jamdex, and the government is primarily interested in using Jamdex as the vehicle to expand financial inclusion. So I can say, yes, we are definitely involved in the national discussion, and we are actually doing some partnerships, I think, that will expand the usage, not just of Jamdex, but of Link on a whole with some key merchants. So I would say stay tuned. You will see very shortly more announcements around the expansion of the Link ecosystem, which furthers the mandate of financial inclusion.
Okay,
thanks.
All right, thanks, Vernon. I think I heard you say that you are a part of that discussion, and stay tuned, more to come. We're going to move on. I'm not sure what exactly is causing the challenges that we're experiencing because they didn't show up in testing, but maybe if we try to move overseas for a minute, we can see if we can get a better outcome. So I'm going to move to Ian Truron, the CEO of Clarion Bank, and we'll see how it goes with our connection. Ian, we have a question here for you from David Rose. That's Truron. Any major update on Clarion and its growth initiatives?
Good morning, everyone, and thank you, Dave. Thank you, Mr. Rose, for your question. Hopefully the bandwidth from Bermuda is supporting that everybody will be able to hear me. I am pleased to report that Clarion's focus on growing our earning assets, our fee-based business, as well as improvements in asset quality have yielded positive results. Specifically on the growth of the loan portfolio, we have experienced a 10% year-on-year growth associated with that, now up to north of $750 million. And that in conjunction with the interest rate environment that we are experiencing right now, we've actually experienced a north of 20% year-on-year growth in net interest income. So quite pleasing results associated with that. Equally on the fee-based business, we have seen improvements in the markets, which have lifted the assets under management as well as assets under administration, as well as we have had growth from additions from existing customers and net new acquisitions of clients. That has resulted in approximately just shy of a 10% year-on-year growth there as well. So all things being considered, total revenue is up 18% on a year-on-year basis, translating into a net income growth of approximately 75% on a year-on-year basis. In conjunction, as I mentioned, we are looking at continual improvement in our asset quality to therefore limit further losses into the future, as well as to limit capital underutilization, I'll call it that. And we've seen an improvement in our asset quality of approximately 10.5%, down to 6% on a year-on-year basis. So our NPLs now stand at approximately 45 million against loans of 750 million. So I would say, Mr. Rose, thank you for the question, and we are experiencing positive results, and I expect those trends to continue. Back to you, Dave.
All right, thanks, Ian, and I'm sure persons are happy to hear about the positive results, even though, unfortunately, it turned out that the connection wasn't as positive as we would have liked. I'm going to make one more try with a question for Ian Chinapu, the CEO of Guardian Holdings Limited, and then I will take some questions for Mr. Hylton, and the rest of the questions, I think we'll just have to respond to them, to the three persons who have submitted by email. So Ian Chinapu, this question is for you from Stefan Flowers. How does Guardian Group intend to be the dominant player in the Jamaican market? As new CEO, shareholders are excited to watch the energy that you will bring to the group. Your predecessor had made a bold aspiration in an interview some time ago of the company producing super profits and leading the region in a few years. What are your thoughts on this? Will GHL unlock tremendous value for NCBFG based on your strategic horizon and approach?
Thank you very much for that question. Really appreciate it. We are committed and we are passionately pursuing the Jamaican market and all the other markets in the region, both in our life, health, and pensions business and our property and casualty business. So what are we doing? We are focusing on our sales team, their education, and building on their partnerships in the community. We are deepening our global relationships to maintain our reinsurance capacity. And of course, looking at our product mix and our product set to meet the evolving needs of the market so that we are in the right place at the right time with our products. We are also focusing on our community presence, because once you are focused on a market, you must be deepening and engaged in your community. We are enabling our staff and enhancing their skills through investments in technology, education, and risk management. So, as we go forward with our strategies to really contribute significantly to the NCB Financial Group, we are working on protecting and perfecting our core, which is our operations, our products, our people, and our markets, our customer service. We are focused on expanding and growing in our existing markets, where we already are significant players, but we believe there are still many people who are outside of the insurance net or who are underinsured in terms of their coverage and what their plans are for the future. And we are also looking to expand more deeply into adjacent spaces, for example, the health ecosystem, where we believe that our mandate of being life guardians, we can actually contribute significantly and generate value for our shareholders as well. So we are very focused on our strategies. We understand the challenges in the market. We are working assiduously on that. And we know that in terms of our risk management, the capabilities of our people, and our market presence and products, we believe that we will generate significant value to the group and overall. Thank you.
All right. Thanks, Ian. We didn't hear all of it, but we certainly, from what we heard, were able to detect the passion and the optimism and the expectation that you have to be a dominant player, not just in the Jamaican market, but across the major markets in the region in which Guardian operates. And we're getting, unfortunately, some insights into the issue that is affecting that's affecting us at this point, which it seems may be related to the experiences that persons may have been having through yesterday in Jamaica. So that being the case, what we will do, as I had said earlier, is we will deal with other questions apart from a few from Mr. Hylton by email, and hopefully we can also put up a link afterwards that has a clear audio. But Mr. Hylton, we're not going to let you off the hook. We're still going to give you a few questions to get you recorded well for the video, if not live. So the first question from Mr. Flowers for you. We've seen synergies in the insurance line of the business of the group with the NCBIC, the acquisition of the NCBIC portfolio by Guardian, and recent announcements suggest this process is ongoing. Can we as shareholders expect any further synergies in other lines of business, especially asset management and investment banking? And can you speak to any intention of maybe Guardian and Clarion to expand this aspect of their businesses?
All right. Thank you very much for the question. It's a good question. And as you mentioned, we started, in a sense, with the transfer of the portfolio from NCBIC to Guardian Life. But even outside of that, there have been a number of initiatives that have been pursued. Some have been executed, some are in the process of execution. Some are in the process of being developed to create and to recognize and to benefit from synergies across the group, whether it is synergies insurance to banking, banking to insurance, as you mentioned, wealth management, asset management, right across the full domain of financial services. So the simple answer to the question is yes. We're pursuing those strategies. We are pursuing them by looking at those which I think carry the greatest value and are most easily executable. Because as we have mentioned elsewhere, the organization is going through a process of executing on major initiatives, a major transformation. So we have to prioritize, we have to synchronize. But the theme of the question is consistent with the strategy that we're executing.
All right. Thanks, Patrick. And then another question from Mr. Flowers, and I'm going to roll into it a question that came from Mr. Rose. So the question from Mr. Flowers is this: with the frequent movement of finance industry talent between organizations, how does NCBFG aim to incentivize staff who remain committed to the group? The retention of senior gifted talent will be key to sustainable success of the organization. How is morale? Is morale low regarding the digital-first strategy? How is the group's proprietary information and strategies handled with these exits? And I'll tell you that the question from Mr. Rose is, in the what does succession planning look like for NCBFG, in particular at the senior executive levels, including yours?
All right. So let me start by quoting the title of a book, right, which is something that we fervently believe in. And the title simply says, "Talent Wins." Right? So we recognize that, it's important to have people with the right skills, the right competences, the right capabilities, and so on. But perhaps more important is to have people with the right mindset, people who have an owner's mentality, people who are committed to the business. We value those attributes in our people. We think the best way of demonstrating that value is not by what we say, but in what we do, in terms of how we engage with those people, in terms of the arrangements we make with them for their recognition, for their compensation, for the opportunities that the group provides them for upward mobility, right, as they seek to enhance their personal and professional careers and, to enhance the fortunes of themselves and their families. We mentioned that we are engaged in a number of different innovations, a number of initiatives right across the full spectrum. And yes, a lot of them involve, new ways of doing things. It involves the introduction of digital. And I made a point earlier that initially, even for myself, digital adoption, carries a little bit of queasiness, uneasiness, because it is new, it is uncertain. But at the end of the day, we recognize two things. One, it is not an option, as I said in my statement, it is an imperative. And the best way to deal with something of that nature is just to embrace it, right? So quite frankly, that's the theme of the message we carry to our staff. Many of our staff, they understand that change is required, understand that change is necessary. They understand that change is disruptive, but they also understand that change is inevitable, and they understand that change creates new opportunity, and many of them have embraced those opportunities and are benefited from it. I can give you one simple example. Look at Link. Many of the employees of Link today were employees of the bank or other subsidiaries within the group. And many of them are very excited about Link. They're excited about what is happening. They're excited about the future. We have supported them with, reskilling initiatives, whether it is by way of training, by way of facilitating, experience in different domains, which enable them to work in these new environments. We recognize that, as an organization, we have a responsibility to help to create within the organization the opportunity for these people. We recognize the need to align their compensation arrangements with what is in the best interest of the organization. And so that is something that we do on an ongoing basis. In terms of my succession, I thought I still look like a young man. I don't understand that question. But anyway, no man, that is well under control. And I think it is a fair comment to say that the way in which we have gone about ensuring continuity in the NCB Financial Group and executive succession and so on is exemplary. We have never had to struggle to fill any position. And yours truly is no exception. The plans are there. They are well made, they are well structured, well organized, and will be well executed. I can give you that assurance.
All right. Thank you very much for that, young man. So, that will take us to the end of our of the question and answer section for our investor briefing today. We were, in fact, able to take most of the questions that were posed. We'll ensure that there is suitable audio for the link, and that if there are challenges with the audio, any questions that were answered for which the responses were not clear, we will provide email responses to the persons who asked them. And of course, as usual, any questions that were not taken in the session will receive email responses to the persons who asked them after the session. And so with that, over to you, Mr. Cohen.
Thank you, Dave, and good job as usual. And I'd like to take the time just to thank everyone who participated, all our executives online, Patrick, Dave, the persons who put this all together. I think we executed, barring the issues with the sound, I think we executed another, really informative session. And again, I look forward to hosting you at the end of the next quarter. Guys, enjoy the weekend, and thanks everyone who participated and joined us today. Thank you.
Business owner, wouldn't it be mind-blowing if you could just pick up a new location or a larger factory from a magical shelf?
Need a boost?
There's no need for daydreaming. Get the capital you need to take your business to the next level with NCB SME Boost. Be empowered with the most flexible solution for business owners. NCB SME Boost is specifically developed to support your medium-sized business in any productive sector. NCB SME Boost, the next level is within reach. Apply online or schedule a visit to boost your business.
NCBIA now offers home and motor vehicle insurance. Get more out of life with our custom plans, expert advice, and an easy-to-use digital platform. Contact us to learn more.
The way you've built your career into a masterpiece, so you can have days that look like a work.